Hey Crypto Fools, this is Booter Crypto with Coinspace, and today I'm going to do a tutorial on indicators for charting cryptocurrency coins. Um, Imagine that all of you guys are used to looking at charts like this and thinking, whoa, what is all that going on? It looks like a crazy mix of lines and colors, and I don't really know what's going on. So I wanted to talk to you guys today about RSI, MACD, Fibonacci retracements, trend lines, and moving averages. We're going to do a real quick tutorial. I'm going to jump in. We're not going to go spend too much time and effort on it, but I will show you how it can help with seeing where we came from and using that to your advantage to project where you think we're going to go and find some useful places for exit points and entry points, and really how to time impulse waves and in retracements or dips. And this will really help you become more successful in your trading. So let's start here with TradingView. I'm going to do another tutorial here very shortly about how to set up your TradingView chart. So we'll start from scratch then and show you all this, but this is just what I use for general trading for the most part. Up here you guys see, how you can change your time intervals from, 1 minute, 5 minute, 15, 45, all of these different time intervals. And right now we're on a 4-hour chart, which tends to be a fairly midterm place to look. With coins like Bitcoin, you can go further back and get even deeper looks at the overall trends, with a day and even week views at times. But one indicator I'd like to start with, which I think is very useful tool for finding out when trends are exhausting themselves, or when when the tide's going to change, or when they're hitting a bottom and gonna start heading back north, is RSI. RSI is Relative Strength Index. So if you can see down here, guys, this is this purple graph right here. And the way it works is these lines here are at 70, a value of 70 and 30. They're sort of set up that way. You can make them 80-20 if you want by changing the settings, but that's a general level that people use RSI to determine things. And the way it's read is that if you go above 70, you're entering overbought territory. So generally you don't see peaks over this top line for very long, because as we get into that terrain, those are the points that we tend to turn around at. In the same sense, at the other end of the spectrum, dipping below 30, it's almost unheard of in Bitcoin anymore. You don't see much of the time these lines going through here, and really in the whole crypto world, you see things oversold for almost a second before it picks back up again. But if you go under 30, that's a signal that things might turn around and you might head back up. So this is a useful tool, and some people do all their trading just by RSI alone. But I'm going to zoom in here and see if we can't see where this panned out in the past. So as you can see, we had a major dip here. It looks like we were climbing into this RSI, and then we took a little dip, but we stayed high. And this is a good sign, guys. As I see this RSI start to drop, even though our price was eking out ever so slightly a little bit more high, that was a sign that we were on the downslope and that we were overbought once we got here. And look what happened, guys. We turned around, this price started falling, and it fell fast. We went from 7,700 all the way back down to 5,700. And check out what happened to our RSI, guys. We existed at an oversold spot for literally only a second before popping back up. And then when we're in oversold territory, this is a good spot to place your buys. A lot of people will wait and place buys down here in oversold terrain, and they almost feel like don't even matter what coin you're looking at. I don't feel that way, but if it's a sound coin, you see a solid growth pattern happen in the future and it's oversold, good time to buy. And then check out what happened, guys. It started climbing, price started climbing, same thing. We didn't get really to another severe overbought period till this high when we reached, looks like about 11.8. What happened, guys? A sharp decline. We fell right back down to 8,700, so a real big retracement, and we never even really got to oversold territory there. I mean, it did, the drop, because we were in such a bull run, people picked it up, but same thing here, guys. Overbought, massive correction. So just a good thing to look at. The most recent dip, holy cow, we dipped into that below that 30 range and it got bought up in seconds. I mean, thousands of dollars. You know, it looked like 20% maybe bought up in seconds. So that's how I like to use RSI in my trading, and obviously other traders do as well. The next one I wanted to talk about was MACD. So I pulled up this explanation because it's quite interesting the way they're able to break it down for such an easy way to understand. But essentially, you have one line that is a 26-day exponential moving average, and you subtract that from the 12-day in order to get your curves. Then there's this 9-day EMA that is just sort of like a middle line for you in these charts. So as you can see here, guys, that's what this middle line is here. And the 26-day is this red one, and the what's the number? The 12-day is the blue one. And basically, you're using the movement of these moving averages in relation to themselves and to each other and to this middle line to help you determine oversold times, or I shouldn't say oversold, sorry, but trend turnarounds or trend shifts. So their explanation of the MACD I like quite a bit actually. There's a few different ways you use a MACD. So crossovers of the EMAs, if you have the MACD falls below the signal line, if it crosses over, which what we called was the signal line, is this middle line right there, guys. If we cross over that, falls below the line, it's a bearish signal, which indicates it might be time to sell. Conversely, when we rise above it, it's a bullish symbol. So anytime that we are crossing from below the line to above, we see these big increases. Look at price. Same thing again, we're below, guys. Heading here, let's see, where's our last, let's go back in history, because that's when we can really tell, right? Zoom in. Here we go, we came from down here, guys. Crossed over, massive bull run, okay? We stayed above, so we kept our bull run intact. So that's one way to use the MACD. Another is divergence, guys. When the price diverges from the MACD, it signals the end of the current trend. For example, a price that is rising while the MACD is falling could mean the rally is about to end. So this tells you when a rally is sort of exhausting itself, and that's kind of like this area right here when we went over this with RSI. So check it out, guys. We started falling, as you can see right here. The MACD is at a point here, and we start falling. What was happening to price? Price actually moved from 7,100 to 7,600. So even though we started falling, price was going up, and look what happened. We just fell off the map. So that's a good way to tell, these divergences in price. So when we have this price going up, right? MACD going down. That's a good time to sell. Let's say, hey, you know what? I think we're petering out on this run. Same thing on the other side, guys. When we're going up and price is dropping still, like here, it's dropping, price is dropping, but we started turning around and going up. That's a good sign we're getting ready to start a bull trend. So that's another way MACD is useful. The last way that I like to use MACD, guys, is when we get this crossover of the 12 EMA over the 26. When we peak under, that is telling me that our price is going to be falling. Anytime that we go and that blue line peaks above, we're going to start climbing. So MACD crosses, you hear about these MACD crosses all the time. Really important metric along with RSI. Another one that I said I wanted to show you guys was just moving averages in general, guys. Just moving averages in general. So I'm going to go to a chart that I feel comfortable clearing off everything I've got, right? Let's just queue them since I don't actually have any QDM in my portfolio right now, even though I probably should as a hedge. So I'm going to take these off just so you can see. I want nothing on here but moving averages, okay? And this is going to be a little shout out to the boss of Bitcoin. He sort of got me real comfortable with showing me his system and through his videos. This is where I've used a few different moving averages. I like to use the moving averages he uses. As you can see, there's a green line coming through all these prices. If I really zoom in, you can see the line. There's that green line. The green line is called a 7-unit moving average. This orange line is a 77 unit. The white line is a 231 unit. So this just gives me an average of 7 bars. It doesn't matter what time I'm on. Right now I'm on the 4 hours, so it's an average of 7 of the last 7 4-hour increments. If I'm on a day, it's the last 7 days. And then it maps out a line, a curve based on that. You know, that means the orange is mapping out the last 77 bars average. And then 231, it gives us a short term, a midterm, and a long term. But the way these moving averages interact create a picture for us. The way the boss uses his system is quite effective, guys. He uses, if your 77 is crossing the 7 is crossing the 77, you buy. That means we're above it, because he has a system where these moving averages all like to come together and then move again. And the green's always going to run. It's going to pull the orange with it and put pressure on the orange, and the slow one is going to be this 231. But so if you notice that, guys, he buys when it crosses, he sells when it crosses back down. In this case, we wouldn't have really netted much or lost much. It looks like we would have actually made just the slightest amount. But check it out, guys. We came through with our short-term average through the 77, and then the sign for me would have been, this is bullish, very bullish. Look at all this happening here. We busted through, came through, and then when we broke the 231, guys, with the 77, now all three are turned upwards. That means with all this energy in the chart, it's being buoyed up. All this energy is buoying up the price, versus, you know, when we're under and everything's turned downward, we're falling, we're falling, we're falling, we're falling, and then bam. So this is when this chart turned bullish. And check out, if we would have followed that system that BK talks about, look at that, guys. We'd have been along for a ride of, oh, it's not going. We'd have been along for a ride of, just on the initial push, of 289%. And, you know, a lot of people would say we're expecting a lot more. BK would have said, hey, we crossed again, sell. We crossed again, up, buy. That's a wash. There's no loss there. And we'd be sitting here with 290%. So that's another one that we like to use, is I like to set up my charts with moving averages, because that helps us in charting, guys. And then the last indicator I'd like to go over is volume, okay? Volume is a huge indicator. For a lot of these charts, guys, you're going to see, you know, for example, where is something that just took off like a monster and it didn't have anything happening before? You know, Mona, for example. Let's go check out Mona. This is a Japanese coin, not really following it anymore. It's like the Doge coin of Japan. But guys, this is a great example. So if we can zoom in here, I'm going to try to get as zoomed in as we can. So if you notice, guys, when we're flatlined and there's no action, you see these volume bars down here? These are showing how much volume comes in. If we'd noticed that we had no volume from September all the way to October, and then we get a big spike, that's kind of interesting, right? The volume increased 20-fold there. Then we had a little less again, and then we started getting some more spikes in volume, and then we petered off again. That would tell me, looking back historically, we had no volume, a little volume, a lot of volume. Something is brewing here. All of a sudden, we get our first high volume bar here. Bam. If we get in, we're saying, oh, the volume's building. There must be interest in this. It can be an indicator that nets you, you know, say we get in here, we're looking at 600% growth virtually in days. So volume's a big one. I don't know what I clicked there. Volume's another big one. Last but not least, guys, I'd like to just go over basic trend lines. So I'm going to go back to the Bitcoin area. I'm going to show you guys how I found the channel and how a lot of people find channels in cryptocurrency. Okay, I mean, this is used across the board. Everybody uses the same, you know, I don't want to say the same, but a lot of people use similar techniques with just these simple lines, guys. I just want to show you, what do you need to draw a line? How many points? You can't draw a line with 1 point. You need at least 2 points. A lot of times the charting, I like 3. 3 is a real, it says you're very confirmed to have 3. But I like 2. 2 is the minimum for me. So just to show you guys this recent movement in Bitcoin. We were sitting down here, guys, and we came in. We sort of found this point of resistance here. We came up. Sorry, we found this bottom here, guys. Then we came up and rose. We found a top. We came back, found a bottom. So what I did is I actually connected this line. So we'll get rid of that line just so you can see what I did, guys. Get rid of this line. I connected a point here. I saw, oh look, it looks like we're kind of touching all these points. So I'm going to connect that point right here. So if you can see, we touched right here, we touched right there, and I'm gonna think, you know what? I'm gonna clone that line. That's a clear line. We bounced off of it twice. There's some sort of line going on there. I'm gonna clone it, right click and clone that, and then I'm gonna throw it up top here and just see what this looks like. So it looks like we ended up riding in this channel the whole way, right? So we bounced. This told me after this bounce, and I charted this here, I thought I had a pretty good idea of once we ran where we'd peter out at. And check it out, guys. We ended up turning right around at the top of that. So to me, that told me, hey, Bitcoin's traveling right now in this little bitty zone right here, okay? He's traveling in this channel. That's what we're going to call it when we have 2 trend lines. The other thing I did was I noticed, now wait a minute, this line touched, and then so did we touch the bottom wick of this. So now I've got a point here. Oops, I moved that one. So for this line, I'm going to click on it there. I've got a point here now that we touched. And then I can make that point with this bottom wick area too here. And that to me told me, you know what? This might be sort of an alternative channel. So we might be running in the smaller channel, but it looks like we've also confirmed touched here and here, so maybe we'll also go as far as this. And then it gets a bit messy, guys, but you could even take that one and throw it up top. And check that out. If we go to that wick, it bounced off that channel here, came down to there. So we've got 2 channels we're kind of have the capacity to exist in, a smaller, tighter channel and then a wider channel here. And it looks like we've touched both the top channel there and the top of this channel here. So if you see, guys, you'll find channels inside of channels all the time. But this, it looks like we're breaking the smaller channel, and I have a feeling we're going to bounce right off this one here, and then we're going to continue existing in these 2. It's played out that way over and over again. I'm going to show you guys another one I've been looking at. I've got a bag of syndicator. Another way to use trend lines is to create wedges. So a lot of times when you see sort of this tightening patterns, they're indicative that something big is getting ready to happen. So I'm going to go down to the 30-minute chart just so these get a little bit tighter. You can see what's going on here. So this is a common pattern. You see these triangles forming where you have a top, you take that top line, you've got like now a bottom line, and then once we've bounced off this bottom line twice, I've got a line here. I can connect that, and that's when I did it here, guys. I connected this dot to that dot, and then waited for this. So I made this line, waited for this one to come back up, and I thought, oh gosh, now I got 2 lines up top, threw this one in, and this gave me this channel. And check out what happens, guys. So at this point in time, that's all I had. But look what we did. We came down, we bumped the bottom line again, came up to the top, bumped the top line again, and we got so tight in here that it had to make a decision. And when you have these triangles, it's common that if you break down, it means you sell. If you break out, it means we're going up. And look what happened. We went up, bounced down, even confirmed that we weren't going to go lower than this initial line. So we're bouncing off the old resistance, and now we're going back up. So it's done that twice, as you can see. I did it down here as well. So it can be extremely profitable to use trend lines, and as well as RSI, MACD, volume. And you know what? I'm going to save Fibonacci tools for another time because it's a little bit longer of an explanation. So anyway, guys, hope you like my indicator list. If you liked this video, please like it, subscribe, click that notification bell. I'm going to have a lot more content coming to you guys, and feel free to hit me up in the comments. I love hearing what you guys liked, didn't like, what you want me to put in next videos, and hope this was helpful, and I hope this helps everybody get more successful with their trades and help them learn charting, because it's a fun science, it's a fun art, and there's energy in these charts, guys, just like there's energy in the universe, energy inside of us, energy with the waves in the ocean, there's energy in the charts. So they can be mapped out with tools, and that's what the Fibonacci tool is about, and we'll talk about that one next time. So happy trading, and catch you on the next one.